So nearly half of South Africans are under significant financial pressure, and that's according to the latest savings and investment monitor from Old Mutual. We speak now to the head of financial, John Manyike, for more on this. John, thank you for joining us. According to the research, more and more South Africans are taking out personal loans to survive. Are they able to repay these loans in the current economic environment?
Well, it's certainly a difficult time for many South Africans who have been relying on debt for daily living expenses. I mean, we've seen about 35% of the OMSIM respondents saying that they actually borrowed money to pay other debts, and we're seeing 34% borrowing money for daily living expenses. So it's certainly a challenging time because of the high, interest rate. I mean, we've just come off a high inflationary environment, and unfortunately, the central bank had to respond to curb the inflation rate by increasing interest rates. So we're certainly seeing a lot of pressure from many South Africans.
John, debt is ever increasing, it seems. Your research also shows that people are lending money from family and friends, and that's never the ideal situation.
No, absolutely. I mean, when somebody starts borrowing money from family and friends, the likelihood is that they've maxed their credit limit, or they probably wouldn't qualify because of maybe of impaired credit records given the challenging times. So people are now resorting to borrowing from friends and family members, which is the hardest thing to do because the last thing you need is to risk your relationship with your family.
So the Savings and Investment Monitor was conducted with 1,500 respondents with a monthly income of between 8,000 Rand and 100,000 Rand. Now, just explain to us, how do you extrapolate this information that you received?
So we would look at a sample size, but it will be weighted on the back of the South African population. So you would have a view as to what the income looks like on a sliding scale, and then actually match the sample size accordingly. So we're very comfortable that the sample size is very reflective of a South African population.
So, John, another interesting but maybe not so surprising finding is that more South Africans are relying on a second job to make ends meet, and maybe even a third job.
Well, absolutely. We're seeing people relying on a second job. Basically, people have multiple income streams. What I can tell you, though, is that South Africans are very resilient. Not only did we see them, relying on alternative streams of income, we're seeing about 70% of South Africans relying on, loyalty and rewards points. We've seen quite a number, about 36% switching to cheaper supermarkets, 40% switching to cheaper TV streaming options. So, I mean, certainly it's been quite a crunch, but at least South Africans seem to be coming to the party, and they're showing some resilience.
You've already mentioned a few examples now, but on a practical note, how are people trying to save money? Is it also by cutting out necessities or cutting on insurance?
Well, insurance is not ideal to actually cut on any insurance, because that is your protection, either in terms of insuring your assets, or it could be maybe insuring your loved ones. But certainly, I mean, we're seeing people finding different ways to actually cope. I mean, the DIY approach, which is also not a great news for South Africans, because, I mean, when you have about 33% of people who are cutting down on domestic help, then you know that our unemployment rate cannot improve in that sense. But overall, there's a lot of resilience that South Africans are showing during very, very challenging times.
John, just quick, if we look to the future, is anything going to change soon for the better?
I think anything is possible. I mean, we must actually we need to be encouraged by the fact that inflation is coming down, which was largely driven by food inflation. As food inflation came down and we saw, interest rates also, in other words, the Reserve Bank now had the opportunity to not increase the rate hikes, but also, of course, we are impacted by, the geopolitical environment with everything happening between Russia and Ukraine. But having said that, the fact that inflation is coming down and there was no increase in interest rate, and we might just see interest rate cuts perhaps in the new year.
Thank you, John, for your time. That was the head of financial at Old Mutual, John Manyike.